Good morning. My name is Margot, and on behalf of Brent and Luke, I'll be presenting the company background of the Australian and New Zealand Banking Group, which we all know as the ANZ Bank. It is the third largest bank by market capitalisation in Australia after the Commonwealth Bank and Westpac. The history of this bank extends back an impressive 150 years and involves dozens of different banks. It all started in London when the Bank of Australasia was established under Royal Charter in 1835, and its first office was opened in Melbourne later that year. ANZ Bank as we know it today was formally established on October 1st, 1951 when the Bank of Australasia merged with the Union Bank of Australia. ANZ is a publicly listed company on the Australian Stock Exchange and was incorporated on the 14th of July 1977. It has more than 9 million customers worldwide and employs over 50,000 people. The chairman of the board is currently David Gonski and the chief executive officer is Michael Smith. David Gonski was previously director on the board of ANZ from 2002 to 2007 and took up the position of chairman in 2014. Prior to his appointment, Gonski was chairman of Australia's sovereign wealth fund, the Future Fund. Michael Smith has been ANZ CEO since 2007 and is likely to retire from his position in 2016. However, a replacement has not yet been named. The other key management personnel are shown in this slide. Some of the personnel were in management positions for part of the year due to being newly appointed to the role. The key management personnel make up 5 different board committees which oversee different management aspects of the company. These committees come under the headings of audit, governance, human resources, risk and technology. ANZ's combined employee workforce across all divisions is 50,328 staff. It is a banking institution. Its primary capital resource is cash, loans, interest and investment earnings. As of 2014, the annual report of the bank had net assets of $49 billion, an increase of almost $3.7 billion over 2013, as well as cash of $32.5 billion. Net loans and advances made up the greatest asset class, with deposits and borrowings making up the greatest liability class. The ANZ annual report from 2014 shows that the bank made a profit of almost $7.3 billion, earnings per share of 257 cents, and had net assets of $49 billion. The current slide shows the growth of these items throughout the financial years of 2010, 2013 and 2014. Since 2010, the annual profit of the company has steadily increased from 19% over 2010 to 11 to 15% in 2013 to 14. There has also been a recent increase in lending of 8%, attributed to higher levels of housing lending within Australia and global loans being issued. There was also a considerable increase in customer deposits of 9%, both within Australia and globally, which may be a result of a higher savings rate. Operating expenses also increased by 6% for this period, whilst liabilities and assets both increased by 10%. ANZ was first listed and traded in the financial sector of the Australian Stock Exchange on the 30th of September 1969. It is currently issued over 2 billion ordinary shares, with the largest 20 of over 400,000 shareholders controlling 57% of this. The bank is also listed on New Zealand Stock Exchange, trading under the same name. ANZ has distributed the largest amount of shares in comparison to the other 3 financial institutions that make up Australia's Big 4 banks. One of the key elements of ANZ's company strategy is a strong focus on the Asian markets in the company's pursuit to be a super-regional bank. This link means that whilst there has been an increase in trade, capital and wealth flows in the Asian region, the bank is particularly susceptible to market fluctuations within Asia. This can affect the share price level of the bank and is more open to global market conditions. This graph represents the weekly price chart of the ANZ Bank during the period from 2007 to 2013. Disregarding the trend line marked TL and the resistance price level shown as R1 for this presentation, this graph is a great example of the peaks and troughs incurred in ANZ's share price level over a consecutive 6-year period. P1 indicates a share price peak of $31.50 on April 18, 2007. Previously, share prices were averaging $28 highs. This price was recorded again as another intraday high 6 months later, highlighted by P2. These 2 peak share price levels are indicative of a demand for stocks by buyers who have predetermined the share price rising for the bank. The price decline after this peak has been attributed to sellers dominating the share market, consequently decreasing ANZ's share price. The extreme trough occurring from January 2008 is a result of the global financial crisis and its consequences on the Australian banking sector. Although this is a large trough for the financial institution, these figures were comparatively less than declines seen by commercial banks in the United States and United Kingdom. ANZ's share prices returned to the peak of $31.50 at P3 on the 30th of April 2013, as shareholders who had purchased shares in 2007 simply wanted to recover their capital. This peak was followed by a decline in price throughout May 2013 due to an excess of sellers within the market. Currently, ANZ shares as of Friday, March 27, are at $36.73. During a 52-week period, the bank has had a high of 37.05 on 23rd of March 2015 and a low of 30.47 on the 17th of December 2014. Although recent figures are encouraging for shareholders, there was a drop in share price of 2.5% in the past month. This was in response to ANZ's unchanged first quarter profits from 2014 to 2015, substantially lower than the bank's last quarter statutory profit of $2.23 billion. Share price projections for the rest of 2015 are encouraging, as Chief Executive Mike Smith predicts that the current challenging environment for the global markets business will improve, which in turn will benefit market conditions for the financial institution, thus most likely responding in an increase of share price levels. These predictions have been mirrored by financial analysts at the Reserve Bank of Australia in their 2015 report of domestic economic conditions. Any company that is put on the stock exchange will automatically make the company a publicly owned one. Therefore, the ANZ Bank's ownership lies with public interest. According to an annual report published in 2012, it states that the HSBC custody nominees own over 18% of the ANZ Bank, followed by JP Morgan nominees Australia, who own 16.65%, National Nominees Proprietary, who own 13.09%, and Citicorp, who owns 1.79%. These four major firms that I've just listed are the main shareholders of Australia's major four banks. Then we have other 20 top owners who own 10.2% of ANZ, then all other shareholders like the average Australian that make up 43.32% of ANZ's ownership. So as we can see, almost 60% of ANZ's ownership, there is the clear majority of that for major firms who have particular interest in the bank. One interesting observation I came across was the fact that ANZ Bank hasn't made any significant acquisitions of local smaller lenders or competitors. For example, we know that the Commonwealth Bank has acquired Bankwest and Aussie Home Loans, thus making ANZ Bank a major player against the other four major banks who have subsidiaries to cater for and manage. Thank you for listening to our presentation of the company background of ANZ.